Hello everyone and welcome to the Ticker.com's news channel on YouTube. On this channel, we review stock markets and discuss financial news, market trends, and economic data from Wall Street to Global Street. So let us get started. Wall Street indices turned sharply lower this week and extended losses in February. Stock market indices extended January gains this month only to lose confidence amid persistent Trump White House chaos and tariff policies that fuel inflation. Investors are finally waking up to the destructive tariff policies that will rob from the U.S. consumers, kill jobs in China and Asia, and increase federal government revenue, which will finance next tax cut for the wealthy. Moreover, Federal Reserve is more likely to delay its next rate cut and keep higher interest rates for longer, which will slow down the economy and further dampen the housing market. Last November, American voters selected a man and the party that will support businesses, create jobs, and make the federal government more efficient. Instead, they got policy chaos, tariffs that will drive inflation higher, and total absence of federal government regulations that will only benefit big corporations and trample smaller businesses. Investors are increasingly factoring economic slowdown and rising possibilities of a recession as federal government chaos sinks deeper and spreads wider into the U.S. economy. On the economic front, the Federal Reserve's preferred inflation measure slowed in January. However, the watered-down inflation gauge is expected to rebound in the months ahead as tariffs kick in. The U.S. economy expanded at an annual pace of 2.3% in the fourth quarter, slowest in 3 quarters. The U.S. economy managed to deliver 2.8% growth in 2024 amid resilient consumer spending and rising infrastructure spending by the Biden administration. However, Trump's tariff war is likely to drive down economic growth in 2025 to close to 2% or maybe even lower. Housing markets sent mixed signals, and new home sales in January slowed to an annual pace of 657,000, a decline from the previous month and from a year ago. Elevated home prices and mortgage rates are dampening housing market transactions. Across the Atlantic, new passenger car registrations in the European Union declined nearly 3% in January as consumers watched their spending and delay purchases of large-ticket items. Hybrid cars led sales in the month and command 35% of the market share, followed by petrol cars holding 29% and battery electric vehicles with 15%. In other major economic news around the world, U.S. durable goods orders soared annual 4.3%, driven by a rebound in transportation orders. UK home prices rose for the 6th month in a row in January, despite the weakening macroeconomic backdrop. Inflation in Germany was steady at 2.3%, but fell below 1% in France for the first time in 4 years amid weakening energy prices. Japan softened an increase in retail sales. Tokyo area inflation, housing starts, and industrial production may cast a shadow on the widely anticipated rate increase next month. Let us review key events in global bond, currency, and commodity markets last week. The yield on the 10-year U.S. Treasury eased to 4.25% as investors sold stocks and bought bonds in anticipation of a slower economic growth fueled by a growing list of import-facing tariffs. Texas crude oil prices edged higher by 5% to below $70 a barrel as U.S. economic uncertainty weighed on the demand outlook. Natural gas prices in Europe dropped 10% to 44 euros per megawatt hour as traders reviewed warmer weather outlooks, potential easing of the EU storage mandate, and growing possibilities of ending the Russia-Ukraine conflict. The euro edged lower to $1.04 ahead of the European Central Bank's rate decisions on Thursday, and the central bank is widely anticipated to cut rates for the 5th consecutive time on Thursday. The yen decreased below 150 against the U.S. dollar after the latest inflation data. Retail sales and industrial output supported the Bank of Japan's case to continue with its rate hike campaign. Let us shift our attention to major stock markets in the U.S., Europe, and Asia. The S&P 500 index and the Nasdaq Composite extended losses for the second consecutive week as investors switched from stocks to bonds amid worries about the state of the U.S. economy. European markets meandered amid positive earnings and ahead of the widely anticipated rate cut next week. Nikkei 225 stock average extended losses for the second consecutive week amid looming tariffs, which could slow exports and broader economic activities. Hong Kong and China indices plunged sharply in Friday's trading and trimmed annual gains after the White House slapped additional tariffs on Chinese goods for the second time in as many months. Indian market indices extended losses to the third consecutive week as foreign investors trimmed their holdings and domestic investors stayed on the sidelines amid high valuations. On the screen, you can see monthly returns of leading stock market indices around the world, and benchmark indices around the world erased gains of the previous months. Let us shift our attention to merger deals, market movers, and earnings update from leading companies last week. Apple announced its plan to invest $500 billion in the U.S. in order to boost its artificial intelligence capabilities. NVIDIA Corporation reported a sharp jump in revenue and earnings. And the artificial intelligence chipmaker guided strong sales in the first quarter. Salesforce Incorporated reported muted revenue growth in the fourth quarter, and the cloud-based software company guided fiscal 2026 revenue growth between 7 and 8%. Lowe's Companies, the home improvement retailer, said comparable sales in the fourth quarter rose after falling for nearly 2 consecutive years. Zoom Communications dropped 3% after the communication platform operator offered a muted revenue outlook in the current fiscal year. Domino's Pizza reported strong results for the fourth quarter, hiked its dividend, and reiterated its stock repurchase plan. Rolls-Royce Holdings surged 15% after the British aerospace and defense company hiked its annual dividend and estimated higher profit in the current year. Danone reported muted sales growth, but earnings jumped, and the French dairy food products company said it plans to step up its acquisitions. Stellantis, the parent company of Fiat and Chrysler, reported a sharp plunge in its annual earnings amid weakness in the U.S. and Europe, but estimated rise in sales and cash flow in the current year. In the week ahead, investors in the U.S. are looking forward to the release of non-farm payrolls data. Economists are anticipating the U.S. economy to add at least 139,000 net new jobs in February. Investors are also looking forward to the release of international trade data, which is likely to show elevated trade deficits. On the earnings front, investors are looking forward to earnings from Broadcom, MongoDB, Costco, Best Buy, AutoZone, Kroger, Ross Stores, Nordstrom, and Foot Locker. In Europe, investors are anticipating that the European Central Bank will deliver a rate cut for the 5th meeting in a row next week. This will mark the second rate cut in 2025 amid worsening economic outlook and easing inflationary pressures. On the earnings front, investors are looking forward to releases from Bayer, Merck, Reckitt Benckiser, DHL Group, Informa, Flughafen Zurich, Thales, Intertek Group, Fresnillo, Schaeffler, Vivendi, Zalando, Lufthansa, and Schroders. In China, all eyes will be on the so-called 2 sessions held by National People's Congress, where policymakers are expected to announce annual growth target, inflation estimate, and budget deficit goals. China's Statistics Bureau is also expected to release its international trade data for January and February and official surveys on business activity. On the earnings front, investors are anticipating results from China Unicom, Hon Hai Precision, Fast Retailing, Prada, the Wharf Holdings, United Microelectronics, SJM Holdings, MTR Corporation, and Fortune Real Estate. You can review daily U.S. and global financial market news, stock movers, earnings releases, SEC filings, and economic updates on ticker.com and 123jump.com. You can find the latest financial books on Rodera.com, keep up with financial industry events on eventsinamerica.com, review ETF and mutual fund performance and in-depth profiles on tickerfunds.com, and review market updates and stock movers in India on niveshak.in. That is all for today, and we will see you next week.